To this now, the South African Revenue Service has officially launched its 2025 tax filing season, and it will run until October 20th. SARS Commissioner Edward Kieswetter says from today until July 20th, the Revenue Collection Agency will be notifying taxpayers who qualify for the automatic assessment. If you are not sure what the auto assessment is, let's tell you all about it. We speak now to the CEO of Chapu Chartered Accountants, Ncumisa Mkunqwana, who is joining us this evening. Ncumisa, good evening to you, and thank you so much for your time. So firstly, let's perhaps maybe tell the viewers who are not aware what an auto assessment is and who gets to be auto assessed.
All right. Good evening. Thank you so much for having me, and good evening to your listeners as well. So what SARS does, they take the data from your from medical aids, from banks, financial institutions where you might have investments in and you're earning interest, and then they basically determine an amount of tax that is either the tax liability that's due to them or a refund that's then due to you. So it's normally if you are just maybe employed and you don't have any other additional income besides your employment, that they can use that data to then recalculate the SARS liability or refund to you.
And must you always accept, the outcome of that auto assessment?
So if you do not agree with the assessment that SARS has made, so if you've got supporting documentation from your different financial institutions or other third party. So if you don't agree, on the SARS e-filing website, you can then create your own tax return. Then you can put in the data that you have, and then it would calculate then the correct information for your tax return.
So when you then So when you then, of course, are getting this, and maybe let's say, for example, you agree and you take it, are there any risks that are involved?
So if you agree and you take it and you agree with what they've calculated, there are no real risks involved unless the amount that they've calculated is incorrect. That will the risk would be there. But as I said, if you pick up errors, I would urge you to go to SARS or go to the website and ensure that you or even your third-party information, because SARS gets that information directly from your financial institutions. So if you've picked up errors, just then inform your service, your third parties that, you know what, there's an error, so they can update it as well. If you, because obviously there's time frames as well, so you also have to ensure that you submit your return within those set time frames. So they said they're going to communicate the auto assessments from today, I think up until the 20th of July. They're doing it in batches. So if you don't get an auto assessment, also you can still do then a normal tax return. And normally if you don't get the auto assessment, it means then you've got additional income that you would need then to include in your tax return.
Okay, so then let's say, for example, you then receive a refund from the auto assessment, and then you realize, for example, that there might be some extra deductions or income that you still need to include. Is this a possibility?
So the tax period runs from now up until October. So if your auto assessment, you realize that there's things that SARS hasn't taken into account, you can make amendments to your tax return. So SARS does allow you to make amendments, and then they would reassess. So they'll then issue a reassessment based on now the new information that you have. But if it's information that you have now, I would urge you to rather correct it now and get it over and done with. But if it's information that maybe you don't have currently and you pick up that there's an error, then they can reassess you as well.
So it is possible, even after, for example, you've received your refund from that auto assessment, then to submit this information, this additional information? Okay.
And then they will do a reassessment. That means that they will then recalculate you either your tax liability or tax refund. You might then be, if you've got a liability, then it means then there's a payment, then that's due over to SARS. Then you would have to pay SARS that amount. On that assessment, there'll be a date. So if there's an amount due, there'll be a date that they'll say you need to pay this amount on that specific date. It's also important to ensure that on the date that has been given for you to make payment, if you've got amount that's due to SARS, you stick to that date, because if you don't stick to the date, then the challenge is that you'd also end up paying interest and penalties then for being late if you're not paying the amount that is due to SARS on that specified date.
So just before I let you go then, speaking of the issues of penalty, there are people who believe that, for example, if you do accept the outcome of the auto assessment, you might be exempt from penalties or even legal action. Is that correct?
So it will depend on what the interest or the penalty is for. So with the auto assessment, it means then you would have filed on time, because it's before the cutoff time. But however, if you make any changes, then obviously then you need to adhere to those times. And if you don't adhere to those times, then you would obviously be late, and that's where the penalty would be. Also, if there's you picked up that there was something incorrect and you didn't maybe communicate it to SARS, they can also hold you liable for that if you've picked up that there is actually inaccuracies. So if there's inaccuracies in your return that you were aware of and you actually didn't communicate to SARS as well, you can also be held liable for those. So I think the most important thing is ensuring that your information is correct, and check the auto assessment that SARS has calculated against the supporting information that you have.
Ncumisa, I appreciate your time. Thank you so much for that information. Really helpful. That was the CEO of Chapu Chartered Accountants, Ncumisa Mkunqwana.